Welcome, investors. Get ready to delve into the dynamic world of the Indian stock market. As July 2025 draws to a close, the Indian stock market finds itself at a crucial crossroads, a point where various forces converge, creating both opportunities and uncertainties. And with so much at stake, everyone's watching closely, from seasoned professionals to those just beginning their investment journey. The market's been volatile, experiencing significant swings that have kept investors on their toes. And Monday, July 28th, looms large, potentially setting the tone and direction for the weeks to come, making it a pivotal day for market participants. What's behind the tension? What are the underlying factors contributing to this heightened state of anticipation? Locally, mixed company earnings reports have painted an unclear picture, leaving investors guessing about the true health and prospects of various businesses. Globally, high-stakes US-India trade talks are adding another layer of complexity and uncertainty, as the outcome could significantly impact market dynamics. These factors combined have made the market particularly sensitive to news and developments, amplifying both positive and negative reactions. With last week's dips reflecting the prevailing cautious mood, investors are proceeding with prudence, carefully evaluating every piece of information. For new investors, navigating these turbulent waters can be intimidating, presenting a steep learning curve and requiring a calm and rational approach. But remember, market ups and downs are a normal part of the investment cycle, and understanding this can help manage expectations and emotions. The big questions: will the US-India trade deal deliver on its promises, fostering stronger economic ties and boosting market confidence? Will earnings reports show improvement, indicating a positive trajectory for corporate performance and overall economic health? The answers to these critical questions will ultimately shape the market's next move, determining whether it surges forward or retreats. In this video, we'll break down and analyze the key factors influencing the Indian stock market. We'll dissect last week's numbers, examining the data to identify trends and patterns. We'll explore key technical signals, providing insights into potential market movements based on chart patterns and indicators. We'll assess global pressures, understanding how international events and economic forces impact the Indian market. And we'll identify which sectors are thriving, demonstrating resilience and growth, and which are struggling, facing challenges and headwinds. By the end of this analysis, you'll have a clear and comprehensive view of the market landscape. You'll understand what's driving the market's current behavior and what key indicators to watch for in the days and weeks ahead. So, let's dive in and make sense of the week ahead, equipping you with the knowledge and insights you need to navigate the Indian stock market effectively. Let's begin this journey of understanding together, empowering you to make informed investment decisions in the Indian market. Let's check the scoreboard, a quick recap of how the market performed last week. Sensex and Nifty 50, the market's pulse, are key indicators we'll be focusing on today. These indices provide a snapshot of the overall market health. Last week, both indices signaled weakness, painting a picture of a market under pressure. Sensex closed at 81,463, a significant level to watch, down 0.88% on Friday, reflecting the day's trading activity, capping a 2.74% drop for July. This monthly decline suggests a broader trend at play. This isn't a one-day blip. It's not just a minor fluctuation. It's a sustained trend, showing growing investor caution and a shift in market sentiment. Nifty 50 closed at 24,837, mirroring the Sensex's downward trajectory, breaking below the psychological 24,900 mark, a level that many traders were closely watching. A technical red flag, signaling potential further declines. When indices breach key levels, it often triggers more selling, amplifying the downward pressure. As traders see bears in control, leading to a more risk-averse approach. For beginners, these numbers reflect sentiment. They offer a glimpse into the overall mood of the market. Falling indices mean pessimism is in the air, influencing investment decisions. Concerns over global trade and the uncertainties they bring, mixed earnings, with some companies performing well while others struggle, and policy changes are fueling the sell-off, creating additional headwinds for the market. The cautious tone is set for Monday, as investors digest the week's events. All eyes are on whether the market can find its footing and establish a stable base. Understanding these moves is the first step to navigating the market and making informed decisions. The numbers from last week have set a cautious tone for Monday, urging investors to proceed with careful consideration. Let's decode the technical signals, those vital clues that can offer insights into potential market movements. We're going to break down what these indicators are telling us right now, providing a clearer picture of the forces at play, shaping the market's mood. These signals reflect the collective sentiment of traders and investors, offering a glimpse into whether they are feeling bullish or bearish. Understanding this mood is crucial for making informed decisions. Support levels act as the market's safety net, representing price points where buying interest is expected to emerge and prevent further declines. They are key areas to watch for potential reversals. Last week, Nifty broke below its crucial 24,900 support, a level that had previously held firm. This breach signals a potential shift in market dynamics. Like a ball falling through the floor, once a support level is broken, it can often act as resistance in the future, hindering any potential upward movements. This bearish signal means traders are eyeing the next support at 24,750, carefully assessing whether it will hold or if further declines are imminent, and 24,580. These levels represent potential areas where buying pressure could emerge and provide some stability. Exponential moving averages help spot trends, smoothing out price data to provide a clearer view of the overall direction of the market. Nifty is trading below its 20-day and 50-day EMAs, both of which are closely watched by technical analysts to gauge short-term and medium-term trends, confirming downward momentum. This suggests that the selling pressure is currently outweighing the buying interest. When prices stay below these averages, it reinforces the bearish outlook and suggests that the downward trend is likely to persist. Sellers have the upper hand. They are in control of the market's direction, driving prices lower. The Relative Strength Index is another key tool, measuring the magnitude of recent price changes to evaluate overbought or oversold conditions in the market. Nifty's RSI has dropped to 40.64, neutral but trending lower. This indicates that while the market isn't yet oversold, the downward pressure is still present. It's not oversold yet, meaning there's still potential for further declines before the market reaches a point where it's considered undervalued. So there may be more downside before bargain hunters step in, seeking to capitalize on lower prices and potentially trigger a rebound. These technicals suggest caution, urging investors to proceed with care and avoid making hasty decisions. The market could fall further before stabilizing, finding a new equilibrium point where buying and selling pressures are balanced. For investors, this is a time to watch support levels, carefully monitoring whether they hold or are breached, as this will provide clues about the market's next move, and momentum closely, paying attention to the strength and direction of the market's movement to anticipate potential shifts in trend. Technicals aren't foolproof. They are not crystal balls and should not be relied upon in isolation, but they help you spot shifts before the headlines do, giving you a potential edge in understanding market dynamics before they become widely known. Stay alert to these signals, remaining vigilant and aware of the information they provide about the market's current state. They're the market's early warning system, providing valuable insights that can help you make more informed decisions and manage risk effectively. The momentum is with the sellers for now, indicating that the downward pressure is likely to continue in the short term. It's not yet in the oversold zone, suggesting that the market hasn't reached a point where it's considered significantly undervalued, which means there could be more room for the index to fall before it finds a bottom and potentially reverses direction. The Indian market is deeply tied to global events, and the US-India trade deal is front and center. With an August 1st deadline looming, the outcome could reshape key Indian industries. The main issue, tariffs. The US threatened high tariffs on Indian goods, and India prepared to retaliate. Trade wars create uncertainty, disrupt supply chains, and spook investors. There's hope. Recent reports hint at an interim deal, with US tariffs possibly dropping below 20%. India's negotiators are pushing for better access for sectors like textiles and agriculture, which employ millions. As the deadline nears, every update could swing the market. Positive news may spark a rally, while setbacks could trigger a sell-off. The trade deal's fate is the week's biggest wildcard. Investors will be glued to the headlines. While US-India talks create uncertainty, global trade shifts are boosting India's exports. US tariffs on China, Canada, and Mexico have made Indian goods more attractive to American buyers. India now enjoys a competitive edge in 22 key export sectors, accounting for 61% of exports to the US. In Q1 FY26, India's exports to the US jumped 22.18%, strengthening this vital trade relationship. This export surge brings in foreign currency, creates jobs, and supports manufacturing. But this advantage depends on US policy. If tariffs on China drop, competition returns. A favorable US-India deal could lock in these gains and cement India's role in global supply chains. The stakes are high for exporters and the broader economy. Let's zoom in on India's Q1 earnings season. It's a tale of two markets. Banking and financial services are shining, with strong profits and healthy loan growth. The Nifty Bank Index has even outperformed while the broader market slipped. In contrast, IT and some industrials are struggling, hit by weak global demand and cautious clients. This sectoral split means investors can't treat the market as one monolith. Now is the time for stock-specific strategies, not broad bets. The recovery is uneven. Some sectors are thriving, others are still lagging. Let's bring the sector story to life with real Q1 results. HDFC Life, a financial standout, posted 14.2% profit growth, proof of rising insurance demand and sector strength. Banks are also reporting robust numbers, fueled by strong loan demand and economic activity. That's why financial stocks have been a safe haven amid volatility. On the flip side, IT giants are disappointing, slower revenue growth, shrinking margins, and cautious outlooks. Managements cite weak client spending in the US and Europe, dragging down IT stocks and the sector index. This contrast, financials up, IT down, shows why careful stock selection matters now more than ever. It's a market of haves and have-nots. Broad market bets may not pay off. Research and selectivity are key. The landscape is divided, and smart investing means picking winners, not just riding the index. Despite global jitters, India's market has a strong backbone. Domestic institutional investors, DIIs. DIIs, including mutual funds and insurance companies, have been steady buyers, cushioning the market from foreign outflows. This reflects India's robust savings culture and the rise of SIPs, which provide a stable flow of capital. Today, domestic investors make the market more resilient and less vulnerable to global shocks. Even now, smart money is rotating into defensive sectors like FMCG, oil and gas, and realty. Selective buying and DII support mean the market isn't panicking, it's waiting and watching. This domestic strength is a crucial shock absorber, keeping hope alive for a rebound. Once global clouds clear, India's market could be ready to climb again. As Monday approaches, what should investors watch? The US-India trade talks top the list. Any news could spark big moves. Q1 earnings season continues, with more results from banks, industrials, and consumer firms on deck. Watch for signs of sectoral divergence. Strong non-financial results could lift sentiment. Global cues matter too. US market swings and commodity prices, especially oil, will ripple through India. Higher oil prices could pressure the economy and the rupee. The market stands at a crossroads, cautious but resilient. The interplay of trade talks, earnings, and global trends will set the week's direction. Stay informed, avoid knee-jerk reactions, and stick to your plan. Focus on these triggers to navigate the week's volatility and make smarter investment decisions.